Hi guys, good morning and welcome to Trading Hour. We have a good looking screen on our hands, but first up, we're also being alerted that the SEBI chairperson, Madhvi Puri Buch, is speaking at the FICCI event. So let's go across to that.
Is what do we at SEBI see as our purpose? Why do we exist? And the simple answer to that is, we believe we exist for the capital formation of the economy. There is nothing else that justifies our existence. Unless we deliver on this objective to facilitate capital formation, be it equity or debt, we would not have justified our existence. There are many aspects of what we do which are incidental, adjacent, and conjoined with this objective, but the core purpose is to facilitate capital formation. And the reason for that is that this nation is built on the ground by you. Sitting in our air-conditioned offices in BKC, we are not doing nation building. The nation building is being done on the ground by the corporates who are building businesses, producing products, delivering services to the consumer, exporting, and that is what is creating wealth for the nation. If we are in a position to facilitate that, then and only then we would have justified our existence. Very often, the side of SEBI that is seen is what we do in order to tighten what and where and how the markets function. The purpose behind that is actually simple. That a capital market that doesn't have trust at its core, whether it is the retail investor, whether it is the foreign institutional investor, whether it is corporates themselves who want to come in and raise capital, unless there is trust, the entire edifice will fail. Trust is the very foundation on which the superstructure has to be built. And therefore, every step of ours is really predicated on the assumption that unless trust in the system is protected, we will be failing in our core objective, because nobody wants to enter a house that is even possible to collapse. In this context of building trust, the single most important tool for SEBI is transparency. We are a disclosure-based regime. That is again at the base of almost everything we do, because our belief is that the business should be free to do what it does, but in order to ensure that there is trust, what is required is 100% transparency in what is happening. So, growth, development is based on trust, and trust is based on transparency, is the single most important mantra for SEBI. And going forward, this is something that we will continue to reinforce at every single stage. A lot of feedback that we get is that regulatory stability is very important. To be honest, it really confuses me. Because on the one hand, the world is moving so fast. All of your businesses are changing so rapidly. The markets are evolving so speedily. And I assume that you expect the regulator to keep pace with you. Then how can we say that we will come out with a regulation once in a year, that format, expect to keep pace with you? So it confuses me, but I must say that given our process of consultation, we are always to the discussing that what is it that you would like? At the end of the day, if the world around us is moving at 100 kilometers per hour, do you really want the regulator to be moving at 10 kilometers per hour? I don't think so. So if the world around us is changing at that pace, and the need of every entity to keep pace, whether it is with their customers or with their suppliers or with the globe. At the end of the day, we are also one similar stakeholder for you, and our expectation is that just as the market, just as your businesses are evolving so rapidly, the markets are also evolving as rapidly, and they should keep pace. And therefore, our earnest request to you is to keep pace with us. However, what stability are we happy and willing to assure? Not in the nitty-gritty, not in the operational aspects, but in terms of the approach. You need and deserve the right to know what is the regulatory approach, what is the thinking that you must build into your models, what is the thinking that you must be prepared for over the next few years. In a very simple way, I would define our approach through this picture. I'll start with the green side. Everything that a corporate does, what you do is none of our business. It is your business. We have no right whatsoever to say anything about what you do. The yellow piece is about how you do it. So as a regulator, in order to ensure that there is trust in the system, how you do something, we will have something to say about it. For instance, we will say, go to your AGM, take an approval, special resolution, majority of minority. All of these things is how you do what you do. The orange one is about disclosure. What you will disclose about what you do, we will have a lot to say about it. Because as I said, our whole regime, our whole regulatory framework is a disclosure-based regime. Do what you believe is right. Do it in a manner and a way that has been suggested. Disclose everything about it. Which of course brings us to the red lemon. That is, if somebody does cross the line, then not only do we have a lot to say about it, we have a lot to do about it as well. This is our fundamental regulatory approach. I would just like to illustrate by way of an example to manifest what I mean by this principle. So a lot has been said about the pricing of the IPOs of the new tech companies. What is SEBI's view on that? Our view is simple, starting from the green. At what price you choose to do your IPO is your business. We have no business to suggest otherwise. The days of CCI are long gone. The Parliament has mandated us that we should have no view on the pricing of issues. You are free to price your issue at whatever price you consider appropriate. How will you do it? There are, of course, procedures, the way in which the IPO documents are filed, the way that they are given in the public domain, etc. Disclosure. So, simple issue. If a company coming to IPO 3 months ago or 6 months ago has placed its equity with some party, assume a private party naturally, at 100 rupees. And now it wishes to come to the market at 450 rupees. No problem. We have nothing to say in the matter. However, when you disclose, we expect you to disclose to the investor what accounts for the difference between 100 rupees and 450 rupees, what has changed. It may be your internal metrics, it may be external metrics. Please disclose what has changed from the time that you placed equity at 100 to now when you wish to place at 450. Somebody asked me the question, what if nothing has changed? I said, no problem. Please disclose that nothing has changed. As far as we are concerned, I repeat, We are a disclosure-based regime. If the investor sees that yes, 100 rupees to 450 rupees, nothing has changed, he is free or she is free to make her own decision. This is just an illustration as to how we think about what the industry does and what is the role of SEBI in this entire process. The last red one in the same context, if you cross the line, so if that same prospectus fails to mention that there are key management personnel against whom there is litigation, and you have failed to disclose it in your document. Now, not only, as I said, will we have a lot to say about it, we will have something to do about it. So, a lot of what our regulations say is really not just, and particularly disclosure, is not just for the protection of the investor, it is for the protection of the entities raising capital as well. Because nobody tomorrow should point a finger at you and say, you did not disclose this, and we were misled into investing in your company, and now there is a problem in the transaction. So the simple premise of saying full disclosure protects both the discloser and the disclosed. Both parties are protected, and this is the spirit in which we believe in the concept of 100% transparency and disclosure. In moving forward, and we have, as we know, all of us as a country, we know that we have a huge agenda ahead of us because there is a huge opportunity. In this journey, we at SEBI clearly understand that we cannot do this on our own because, as I said, the fundamental belief is we are not the people creating value. We are not the people who are doing nation building. It has to be in partnership with all of you. Now, in that partnership, everyone has a role to play. Everyone brings their specific competencies as a team to develop, as I said, that trust, the plan, the success, the vision, the goals, the performance. All of that is a combined effort that we have to do in partnership. Now, this spirit of partnership, how do we try and manifest it? We manifest it through the way in which we think about engaging with the industry. Going forward, you will see in SEBI, and already I think some of you who have been closely associated with us for the last few years, the question of dogma should not dog us. At SEBI, we are committed to surrendering all dogma. We may have regulations which we have in place. Those regulations may have been put in place in a time and in an era when they were right, they were relevant, they were appropriate. In today's context, they may be completely inappropriate and completely anachronistic. We are very happy to not be attached to that dogma and to simply say that going forward for us, what is important is first principles and data. We will be led by data. We invite data for every single policy that SEBI brings out today. The policy is back-tested with data. Every aspect of what we do is contingent upon data. There is not now even a single piece of paper that is moved within SEBI without data to support what is being said or is being articulated. So our commitment to the industry as we go down this path for the next many years is we will eschew dogma, we will embrace data, and we invite you as well to do the same. So for every proposal that you bring to us, and we welcome those proposals, we wish you to start from first principles, support it by data, and it makes our life all the more easy in order to support the industry, in order to build a facilitative environment where we, in partnership, move towards creating more and more wealth for the investor and more wealth for the country. Another form through which we manifest our spirit of partnership is our advisory committees. On a lighter note, I must tell you that in a recent forum where I asked somebody, what can we do to make our consultation process with industry more effective? I was completely surprised and taken aback when Pat came the answer saying, you are far too democratic. And I'm like, really? I thought being democratic and allowing everybody to very freely participate in the consultation, allowing every perspective to come to the table so that SEBI can listen, absorb, assess, and evaluate was a good thing. But it looks like this particular individual felt that it was too much of a good thing and perhaps to a fault. I must admit, having listened to that feedback, I'm still in the corner where I feel that more consultation is better. And today, most of you in the industry who've been associated with SEBI the past many years would have observed that it's almost like we say, we will not even sneeze without first consulting our advisory committees. We may not always agree with the recommendations of the advisory committees, but what is our thinking? Our thinking is that the world today, and the markets in particular, are so complex and so dynamic that it is not possible for us as human beings, as one set of human beings, to fully appreciate every perspective of what we are about, of the step we are about to take. And therefore it would be very presumptuous on our part and very arrogant on our part to believe hame sab aata hai. It's not possible. Today's world is so complex. You take a step and then you will realize that there were half a dozen things that you did not even know about, did not even understand, and then you have to roll back because suddenly you've done something inappropriate. So our philosophy is, we are not the repositories of all the knowledge. The repository of all knowledge and perspective resides in the market, and therefore we have our advisory committees. Those of you who sit on those advisory committees, you know how much work goes on there and with what seriousness SEBI listens and appreciates what goes on in those committees. So the working assumption is, the world is too complex, we would be delusional to assume that we know and understand everything, and therefore we must consult. When that consultation happens and different perspectives come, there are some recommendations that we feel are not appropriate because in respect of that final and ultimate objective of creating trust in the ecosystem, the trade-off between some of the alternatives is the responsibility of the regulator to finally take the call, because there are usually no easy answers. There are no no-brainers. There are always trade-offs to be weighed. On many occasions, I would say on most occasions, 80–90% of the time, SEBI generally agrees with the recommendations of its advisory committees. On the occasional 10–20%, they disagree and say no, that the balance of convenience for the investors rests in the opposite direction, and we take that view. But our commitment is, we will not take those decisions without first understanding and appreciating the perspective that is brought to the table. We may reach a conclusion of weighing the trade-offs slightly differently from what you believe, but we will not do it without consultation. And that is our commitment to the industry. There is nothing behind closed doors. We will and continue to be committed to the process of consultation, and our doors are always open to recommendations. The only request is they should be specific and actionable recommendations. We do get a lot of what I would call generic recommendations, which are very hard for us to appreciate because we don't know what exactly is meant or what the ask is. But wherever those are translated into specific recommendations, we are completely open. Our doors are open for ideas. And as I shared with the smaller group we were in just before this meeting started, that in the recent reorg that we have done in SEBI, there is now in every department at least one individual, usually 3 individuals, whose KRAs for the year are very simple. You will implement policy which will be developmental and facilitative in nature, which the industry will celebrate. That's the brief. Now go out there and ask the industry what they want, what they need. And these 3 individuals are not permitted to cross-subsidize their annual KRAs with any other deliveries. Nothing. This is what they have to deliver. So if any of you have been receiving frantic calls from these relevant individuals in the relevant department saying, "Batao kya karna hai?" it's because suddenly they need to deliver on something that's going to delight you. A lot has been said today about the RegTech solution, and I think that I'm really pleased to see the manifestation of this spirit, because at the end of the day, as we discussed, trust is based on the fact that there are rules of the game, there are rules of the playground, and everybody who is in this playground follows those rules. In the previous meeting, somebody asked me, what keeps you awake at night? And I said in response that in our market, I do not think that we can claim that we have rid the market of its own peculiar versions of smallpox and polio. We have our own version of smallpox and polio in our markets. Things which are not right, things which are being done, which are wrong, and everybody accepts and supports that it needs to be rectified. The only thing is that when SEBI says, okay, then let's vaccinate everybody, everybody says, him, not me. But the problem is, when you have to vaccinate the entire population. And if you only try and do it in segments, people say, why don't you liberalize everything and only catch the wrongdoers? Okay, that's their version of saying everybody should not be immunized. You cure the people who fall ill, but don't immunize all of us. I find this logic a little hard to implement. If it was possible that you could isolate a smallpox or a polio, I would be the first one to do it. You all know that I come from where you are, right? All these years I sat where you are sitting. It's only now that I'm sitting here for the last 5 years. For the last 25, I was where you are. So nothing would make me happier if it was possible to find a cure for these things, isolate patients and cure them. Unfortunately, it's rarely the case. Unfortunately, unless you prevent, it is very hard to cure. And therefore, it is with this spirit that I earnestly request each one of you that when SEBI comes up with a regulation, to take it in the spirit of saying that we are attempting here to build immunity in the entire ecosystem against our own versions of polio and smallpox. Please support us. We need your support. And without this, it will not be possible for us to rid the market of all the evils that we know of. Front running, insider trading, information asymmetry, fraudulent transactions, manipulation of stock prices. These are all our versions of polio and smallpox. We need to build immunity. That's my request to you. And as has been said before, this is my fervent belief. I've believed in this for the past at least 2 decades, that technology is the magic bullet. People say there is no magic bullet. I say there is always a magic bullet, because what technology has shown us is it is possible to reduce cost, serve the customer better, do better compliance, have better control, all of it at the same time. This is not an era where you do one at the cost of the other. That was Baba Adam ka zamana. Today, the power that technology gives each one of us allows us to optimize, and I would even say maximize each one of these factors by the use of technology. We are attempting to do that in SEBI, and again, my earnest request for all of you to adopt that, and particularly in the context of what we just inaugurated, the RegTech solution that FICCI has come up with, I would request that each one of the members of FICCI train their compliance staff in this new system, adopt this new system, start reporting through this new system, and of course, we had a good laugh in the room before that, the KRA for this meeting was to launch this system. Before the next meeting, I'll start saying, tell me how many of your members have actually implemented this. So KRAs are never lost on anybody. Anybody I can catch hold of, I give them a KRA. So that is my request to each one of you to adopt this new baby and to take this manifest form even further. And to my knowledge and to my belief, very passionate belief, this is what the future of India is going to be. This is what India is capable of doing. This is what all of us together can do towards creating an economy and creating an ecosystem and a markets ecosystem that literally is admired across the world. Thank you.
All right, that was the SEBI chairperson once again reiterating that the role of the SEBI is to ensure trust in the capital markets, saying that regulations will, of course, keep coming and that there will be new regulations which the industry will just have to keep up with. But on that path, they will continue with consultations and, take the recommendations of the advisory committee. She's also addressed a bunch of individual topics such as IPO pricing and saying that, SEBI should not have any say on that front. So lots of important takeaways coming in there from the SEBI chairperson. With that, a quick look at the markets, which, by the way, are holding up really well, 110 points higher on the Nifty. The mid-cap index is absolutely in line. It's come off a little bit, but holding up quite well over there as well, over 115 points on the mid-cap index, and the Nifty Bank also looking quite strong. So we have a good-looking screen. Let's do one thing. We'll quickly get into a short break, but when we come back, we're going to take all of this market action.
Welcome back. Well, the markets are holding well in the green. We are above 18,000 odd, but plenty of stocks in the broader markets really have been buzzing around. And one such stock is Arvind Smart Spaces. Well, the company recently formed a joint venture with HDFC Capital Advisors for a residential development platform with a revenue potential of close to 5,000 crores odd. Mr. Kamal Singhal, the managing director as well as CEO of the company, joins us. Hi, Kamal. Thanks so much for joining in. Well, apologies to keep you waiting. We had important commentary that was coming in from our top regulators. But let's talk about this partnership then. Could you tell us what is the stake in the partnership? HDFC Capital, they are putting in some money as well. So what will their stake look like as of now? Means post this infusion, they are putting 600, you're putting 300 crores odd. And will there be any further investments that will come in from HDFC Capital, or do you have plans to dilute it to anyone else?
Sure. Very good morning. Sorry for this. Our partnership with HDFC has really grown over a period of time. Last several years, they have been our biggest credit providers historically. And then we had our first platform arrangement with them a couple of years back, which is doing great at this point in time. We are investing there under that platform. Subsequently, the relationship grew into an equity relationship where HDFC brought in equity into the company and picked up 8.8% or thereabouts of stake of the company at the parent level. This is the third kind of arrangement and partnership that we got into and recently announced, where there's a new platform which will be investing 900 crores, as you said, out of which 2/3 will be invested by HDFC Capital, and 1/3, which is 300 crores odd, will be invested by this is not a capital dilution. This is a platform investment which will be investing into various projects, greenfield ones. We'll acquire projects and execute them. And of course, on a waterfall basis, etc., distribution will subsequently happen. So this is the third arrangement that we have had. And this is a very important one for us and the biggest one for us with HDFC out of the three arrangements that we've had. This is expected, as you said, to create a top line of around 5,000 crores. And we are hoping that in next few months, we'll be acquiring additional 6 to 7 projects under this new arrangement.
Kamal, give us a few more details. Arvind Smart Homes, right? That's the subsidiary where this money is going to be invested in, right?
Correct.
So,
correct. There will be
what will be the ownership in this particular? How does the shareholding shape up in this particular entity? At the parent level, we have that. It's a BSE filing. We get that stake, 8.5 to 9% stake is what HDFC Cap has in the parent. But in this subsidiary, how does the shareholding get broken up?
Per se, the entity will be owned by Arvind only.
Okay.
This is SPV where these specific projects which are acquired under this new arrangement of 900 crores will be housed together so that it becomes one entity where this arrangement works and develops properties. So it will be owned by Arvind Smart Spaces per se, but at the same time through OCDs and the other routes, funds will be flowing in from.
So there is no equity that HDFC Cap gets in this company?
No, not really.
Okay, all right. And the phases of investment, the 600 plus 300, will it be at one shot? How much of it comes in FY23?
So the money is on tap. I mean, we are all set to acquire projects and deploy these, and the process has started already. In fact, we are already in the process of finalizing a couple of projects under this new arrangement. And the idea is to deploy these funds as early as we could. The constraint is how fast we can acquire and not the money availability. It's available on tap process. So it's available within this financial year.
All right. Hi, Mr. Singhal. Good morning. So you were just mentioning that, there is a revenue potential of 5,000 crores from this. Can you tell us what is the timeline? When do you see this potential really play out? What is the time period that you're looking at for this 5,000 crores?
Sure. So we are hoping that this deployment happens in next 3 to 4 quarters. And typically on an average basis, there are long-term projects and there are short-term projects, but typically real estate projects would take anything between 3 to 5 years to execute. So we're looking at something like a 4 years timeline before all these projects get executed under this platform.
Okay, all right. So 5,000 crores in the next 4 to 5 years. So that is, around FY26?
Correct. I mean, this is when everything will get over, possibly. But of course, the process starts immediately, acquisition starts immediately. We should be acquiring all these projects and adding to this pipeline in next 3 to 4 quarters.
How many projects are you looking to sort of add on with this investment through the partnership?
6 to 7 projects, additional 6 to 7. I mean, we obviously have a current ongoing plan of enhancing the pipeline and investing in new projects. But this specific platform should give us enough and more sort of ammunition to acquire 6 to 7 additional projects.
Okay, got that, Mr. Singhal. If I can just move out of this platform that we're talking about and ask you on a more, overall level, what is the launch pipeline looking like? We do know that you had a couple of projects in Bengaluru which were expected to be launched soon. You also have some in Gandhinagar. Can you tell us when these are expected to be launched?
Sure. So within this financial, we are hoping to, or rather we are planning to launch at least 4 new projects, a couple of them in Bangalore and a couple of them in Ahmedabad, Gandhinagar region. Most of it should happen in Q3 and maybe 1 or 2 in Q4. Apart, these are firm pipelines. I mean, these are things that are almost set. Last bit of regulatory and requirements are being adhered to, and we should be hitting the market before ending this financial. Apart from that, under the new platform also, we are putting in efforts to bring in a couple of more projects additionally to be launched within this financial year. So all in all, 5 to 6 projects is something that we are looking at launching within this financial year, within this platform and outside the platform.
All right, Kamal, but before we let you go, we have to ask you, what is the sales target you have for FY23 and FY24?
Well, I mean, as a group, we are not generally giving guidelines, but we know our trajectory. We have been growing very, very decently in the last few years. Post our demerger from parent, which is Arvind Limited, we have been growing at a very, very healthy stage here. We touched, last year in fact was one of the finest year we had with 600 crores of top line and 600 crores almost thereabouts, collections, etc. We became a debt.
Okay, I think we've lost.
And most of the important parameters, top line, bottom line, etc., have been growing 30% and thereabouts. So we hope that we'll continue with this momentum, and the fresh sales should see similar amount of growth this year as well and next year.
Kamal, I think you had launched one project last month, if I got it right, somewhere in Ahmedabad. There was 20-25 kilometers, I think, away from there. And the response was quite good. I think in the last 2 months or so is one project over there. Could you tell us the number of units that were on offer or that are on offer, and how many of them have already got sold?
The project possibly that you are talking about has not been launched. It has already, it has just been kind of pre-launched sort of a thing.
Yes.
And the project obviously in the pre-planning stage receiving very, very healthy response, but we'll be coming out with the numbers very soon. But as you said, the initial impressions, etc., have been absolutely encouraging and great for us.
Welcome back. You're still tuned into trading. The market is absolutely steady with a gain of around 115 points right now. It is a lot of these financials which are doing very well in trade. So the Bajaj twins, which are really holding up. The HDFC pack also. So HDFC Bank as well as Life, all of them faring very well in trade. But let's invite a guest on the show and talk about the markets as well. We have Prateek Agarwal of ASK Investment Managers joining us right now. Mr. Agarwal, good morning and thanks a lot for joining us. This is Pavitra. You know, as much as we've been talking about the global backdrop, recession fears, inflation, the Indian markets seem to really be in a mood of their own. We're back above that 18,000 mark. How much of an upside do you see from here?
Sure. So a lot of things happening are not actually negative for the country, given our very large import. This thing, just import substitution could result in significant amount of growth going forward. The policies of the day do encourage that. I think looking at global data does bring down the mood a bit. But if one speaks to corporate India, they are showing a lot of confidence. If you look at capex cycle, all parts of capex, be it household in buying houses, corporate for putting up new plants, and government is looking up. It's no longer a drag on the economy; it's an engine of growth. So that is something that as Indian investors we need to be focused on. It is still good. Growth outlook is still positive. Yes, depressed global scenario does pull down our growth from, or rather versus what it could have been. In terms of valuations, we are, I think, back to levels which are sustainable. Close to 18K on the Nifty. Let me put it this way: 93 till now. Earnings and market compounding have kind of mimicked each other. And that is one measure of it being fair. So going forward, one should again expect earnings growth kind of compounding from here on. On 10-year PE, which is something that I look at, we are at sustainable levels. Yes, bond yields to earnings yield does point to bonds being favored over equities just now, which again means that we should see some amount of consolidation. Time correction can correct it, or yes, if yields fall with fall in inflation. So in some sense, that is what we are looking at.
Hi, Prateek, morning. But, is that the reason that a lot of the savvier investors are sort of moving out of equity mutual funds? I mean, we saw the data just a few days ago, while SIPs, which is the retail investors, I'm assuming, are holding up. Looks like lump sum money is moving out. Is that the sense that there are better alternatives to equity at the moment? And how long do you think this feeling might last?
No, so whenever market bounces back, comes back to close to earlier highs, people who may not have booked profits at the earlier instance may do so. So this always happens. And at a high in the market, instead of putting in a lump sum, people would want to come in staggered over a period of time, especially given the uncertainties that we are faced with today. So I think that is a positive. Second, flows into mutual fund is just one bit of what flows from Indians happen to the market. I think with resumption of FPI buying, and broadening of the breadth of the market. Many retail investors may be doing it directly. So that again has to be factored in. I see flows from Indians into equity markets as very secular. Yes, it can have its ups and downs, but given the low percentage of equities in the asset book of an Indian, I think the journey has just about started. We have a very long way to go. So these flows should be taken as very secular and should continue deep into the future.
Hi, Prateek. Long while since we spoke. Nigel on this side. Well, that's right. Equity as a percentage of household savings, I think it was around 2-3% odd. That's moved up to 6-7% odd. But the scope for growth is tremendous from here on. But glad to see an equity cult being developed here in India. Since things are looking up, Prateek, what's the single biggest risk to our Indian markets out here? Global risk, yeah, that's there. If the globe goes in for a tizzy, then obviously India as well will get hit. Hopefully, we don't get hit as hard. But otherwise, what's the other risk we're looking at?
No, so once again, emanates from globe. If globe doesn't grow and we try and grow in that kind of a situation, so our start point is a high trade deficit and it can balloon. As yet, the situation is in control. We have one of the largest hoards of forex in the world, and that's again one reason why our markets are able to function normally and respond to earnings, unlike many other emerging markets. But we will have to watch the space. The forex reserves have been dropping. We are down 90 billion at a pretty rapid pace. Another 90-100 billion down would make our import cover, I would believe, just about 7 months or so, 7 to 8 months. And that is when we may see Indian policy making getting more neutral and less positive for growth. Because it cannot happen that we continue to grow so strongly, sucking in imports, and slowly you continue to see forex getting lowered. As of now, very sustainable. I think up till $400 odd billion, it should be sustainable. But if it goes below that, we would have to watch this space. Secondly, what also happens is if forex goes out, there is automatic tightening that happens. RBI buys rupees, sells dollars abroad. So, unless it, on the other hand, increases liquidity in the system in some manner, we may end up seeing more neutral monetary policy and maybe getting onto the tightening side sooner than expected, which may not be pro-growth.
Welcome back. Well, the markets are making that dash towards that 18,100 odd mark. Remember, the highest amount of open interest is at around that 18,000 call. So those call writers, well, they'll be hoping that this 18,080 to around 18,100 odd level can get held out. If that's not the case, I'll tell you what, we're well on truly on our way towards fresh all-time highs. So just keep an eye at 18,100. That's a bit of a stop. And if that gets taken off, then, we're within 500 points of making a fresh all-time high. I don't think we'll have to wait till Diwali unless something globally really goes wrong. Good stocks in focus. RBL banks moving higher to the high point of the day. You have Vodafone Idea. Suddenly that one's got some wings. It's spiking up. And Canfin Homes, that's the other one, fairly volatile stock. But that as well spiking up as we speak. We'll wrap up on this edition of Trading Hour. You stay with us. Halftime report when we return.